Hi, everyone. While tech investors celebrate 20% gains, SCHD holders are getting roasted in the comments. Someone called SCHD a total dog compared to growth. And you know what? The numbers don't lie. If you love SCHD, what I'm about to show you will make you more confident in your strategy. Because what looks like underperformance is actually the smartest investing move you could make. The brutal numbers and why they're perfect. VGT delivered over 20% this year. FTEC hit 21%. QQQM sits at 18 to 19%. Our beloved SCHD? Just 3%. But SCHD investors understand something about wealth building that performance chasers miss completely. And it's about to make you love SCHD even more. Problem number one, everyone thinks SCHD should beat tech. They're missing the entire point. Here's the truth that SCHD investors already know. SCHD isn't supposed to beat VGT during tech bull runs. They're not a bug. It's a feature. And it's exactly why smart money keeps buying SCHD while others chase performance. A viewer left this comment that shows they totally get it. I hold SCHD to stabilize my portfolio in downturns, not for growth. This person understands portfolio construction better than most financial advisors. They know SCHD's job isn't to win every year. It's to win over decades. Think about what SCHD actually does. It pays you 3.8% dividends every quarter. It holds quality companies like PepsiCo, Cisco, Merck, AbbVie, and Home Depot that generate cash flow regardless of market sentiment. And it delivered over 12% average annual returns across complete market cycles. Through bull markets, bear markets, recessions, and recoveries combined. Solutions for SCHD lovers. Beginner SCHD investors, you're not losing by holding SCHD during tech surges. You're protecting capital while collecting real income. That's 3.8% yield compounds through reinvestment while tech stocks pay you absolutely nothing. Your dividends arrive every quarter like clockwork. Immediate SCHD holders. Your SCHD position is working exactly as designed. It provides the stability that lets you confidently hold growth positions, knowing your base is protected. When tech crashes, and it will, your SCHD keeps paying dividends and prevents portfolio destruction. Advanced SCHD strategists. You understand that SCHD's lower volatility creates superior risk-adjusted returns across complete market cycles. While tech drops 30 to 50% during corrections, SCHD's quality companies maintain operations and dividends. That's how you build generational wealth that survives everything. Problem number two, you're celebrating paper gains without understanding what happens next. Here's what separates SCHD lovers from performance chasers. We've seen what happens when tech bubbles pop. The year 2000, the year 2022, tech crashed 50 to 80% while dividend aristocrats kept paying dividends like nothing happened. SCHD holds companies that survived every crash, every recession, every crisis, and kept paying dividends through all of it. That's not underperformance. That's insurance that actually pays you while protecting your wealth when others are losing everything. The math is simple but powerful. SCHD delivered over 12% average annual returns across bull markets, bear markets, recessions, and recoveries combined. That consistency builds more wealth than chasing the hottest sector every year and getting destroyed during inevitable corrections. Why SCHD investors sleep better? For new SCHD fans, your dividends keep coming regardless of what tech stocks do. Market crash? SCHD pays you. Market surge? SCHD pays you. Recession? SCHD pays you. That reliable income compounds into serious wealth over decades of patient investing. For committed SCHD holders, you've calculated the real numbers. SCHD's 12% average annual returns with significantly lower volatility create better risk-adjusted performance than tech concentration. You're building wealth the smart way while others gamble on single sectors. For SCHD veterans, you know the secret that newer investors are just discovering. SCHD's boring performance during bull runs is exactly what creates opportunities. When tech crashes and others panic sell, you're buying more SCHD shares with your reliable dividends at better prices and higher yields. Problem number three, comparing different tools instead of building complete portfolios. Yes, VGT, QQQM, and FTEC are crushing SCHD this year, but here's what makes SCHD investors brilliant. We're not trying to beat tech during tech bull runs. We're trying to build wealth that survives everything the market throws at us. SCHD isn't competing with tech ETFs. SCHD is your portfolio's foundation. The rock-solid base that lets you sleep at night while taking calculated risks everywhere. That's completely different when chasing the highest returns every single year and hoping the music doesn't stop. Think about it this way: a 40% SCHD position paying 3.8% yields real income while providing stability. Add 25% VOO for broad market participation. Add 20% tech exposure for growth. Add 15% cash for opportunities. Now you have a complete portfolio that works in all market conditions: bull runs, bear markets, and everything in between. SCHD beginners. You're learning the most important lesson in investing. Defensive positions enable offensive strategies. Your SCHD foundation lets you confidently hold growth positions because you know your base is protected no matter what happens. SCHD enthusiasts. You understand true portfolio construction. Each ETF serves its specific purpose. SCHD stabilizes and pays income. Tech captures growth during rallies. VOO provides broad exposure. Together they create comprehensive wealth building that works through complete market cycles. SCHD experts, you've mastered the game. SCHD underperforming during tech rallies means you're positioned perfectly for the complete cycle ahead. When rotation happens, and it always does, your SCHD position saves your portfolio while concentrated tech positions get absolutely hammered. Your SCHD-centered portfolio strategy. Here's how SCHD lovers build complete portfolios that work through all market conditions. 40% SCHD, the foundation we love. This is your core position, the anchor that provides stability, income, and quality company exposure. SCHD's 3.8% dividend yield creates real wealth through compounding reinvestment quarter after quarter. Why we love SCHD? Quality dividend payers with proven track records that survived every crash and kept paying. Companies like PepsiCo that sell products people need, regardless of economic conditions. Consistent returns across complete market cycles. This is wealth building done right. Income power. $40,000 in SCHD generates $1,520 annual dividends. Reinvest those dividends to buy more shares. Compound that for 20 to 30 years. That's how millionaires are made while others chase returns. 25% VOO, broad market balance. VOO provides 500 company diversification while capturing overall market growth during expansions. It complements SCHD perfectly by adding broad exposure without abandoning your dividend growth strategy. 20% VGT, QQQM, FTEC, strategic growth exposure. Here's where SCHD lovers can add controlled tech exposure for upside participation. Limited allocation prevents portfolio destruction during crashes while capturing meaningful growth during bull runs. The SCHD investor's approach. Use tech positions for growth, but never bet your entire future on them. Your SCHD foundation protects you when tech inevitably crashes. That's smart diversification. 15% cash bonds opportunity fund. Cash ready for buying more SCHD during market corrections when prices drop. When others panic sell, SCHD lovers back up the truck at better prices while collecting even higher dividend yields. Implementation for SCHD lovers. Month 1, build your SCHD foundation, 40%. This is your defensive core that provides income and stability through all market conditions. Bull runs, crashes, recessions, and recoveries. Add VOO, 25% for broad market exposure, and control tech positions, 20% for growth participation without excessive risk that could destroy your portfolio. Month 3, complete portfolio with cash reserves, 15% ready to buy more SCHD during inevitable corrections when prices are better and yields are higher. Why this works for SCHD fans? Your SCHD position provides stability that enables confident risk-taking elsewhere in your portfolio. When tech surges, you participate with measured allocation. When tech crashes, and history shows it will, your SCHD foundation saves your portfolio from destruction. Regular rebalancing forces you to sell tech highs and buy SCHD lows automatically. This disciplined approach builds wealth while others chase performance and get destroyed during corrections. The truth SCHD investors understand. Here's what makes SCHD investors smarter than the crowd chasing performance. We know that SCHD underperforming during tech rallies means it's working exactly as designed. We're not trying to win every single year, we're trying to win over decades. When someone says SCHD has been a total dog this year compared to growth, we smile because we know what happens next in the market cycle. Tech crashes, dividends keep coming, Our SCHD positions protect our wealth while others watch their portfolios collapse by 50% or more. SCHD isn't supposed to beat tech during bull runs. It's supposed to build wealth that survives everything. Bull markets, bear markets, recessions, crashes, and recoveries. And it does exactly that while paying you dividends the entire time. Your SCHD Investor Action Plan. Step 1. Stop defending SCHD to performance chasers who don't understand portfolio construction. Let them celebrate tech gains. You're building generational wealth while they're chasing returns that disappear during crashes. Step 2. Add to your SCHD position during market weaknesses when others are panicking. When others panic, sell. SCHD lovers see opportunity. Lower prices means higher dividend yields and better long-term returns for patient investors. Step 3. Reinvest every SCHD dividend without exception. That compounding creates exponential wealth over decades of patient investing. While tech pays nothing, your SCHD dividends buy more shares that generate more dividends. Step 4. Maintain your SCHD core through all market conditions without wavering. Bull runs, bear markets, crashes, recoveries, your SCHD position stays strong, providing stability and income when you need it most. We chose SCHD for a reason. It provides quality dividend growth, portfolio stability, and proven performance across complete market cycles. The fact that it underperforms during tech rallies doesn't change our strategy. It confirms we're doing it right. While others chase performance without understanding risk, we build wealth that lasts. While they celebrate single-year gains without thinking about what comes next, we compound dividends across decades. While they panic during crashes and sell at the bottom, we buy more SCHD at better prices. That's not underperformance. That's intelligent investing. And if you love SCHD, you already know the truth. This content is for educational purposes only and not personalized financial advice. Consider consulting with a financial advisor for strategies tailored to your specific situation. Please like, share, and subscribe. Here's to your investing success and profitable investing.